Okay, hi there, traders, and welcome to Trade the Structure. So, a big night last night in the US, a bit of a beating right from the open. It looks like the consumer is well under pressure, and I think that's going to cause a few issues for many shares. You had target results come out and failed to meet expectations, and they took a severe beating. Now, the Nasdaq was down over 4%, with the S&P down over 4% as well, and the Dow was down around 3.5%, so it lagged a little bit. But we're just going to look at obviously the major moves, major key levels, like we normally do, and just coming to the start of the Asian market session. So before we get started, it'd be fantastic if you can look around my profile, take a look at the website www.tradethestructure.com for more information, and jump on the YouTube channel and have a look around there. There's quite a bit of free material on there, and leave us a like if you do, and subscribe. All right, guys, let's get into it. We've got the S&P on the screen here. Big S&P that brought the market pretty much dragged down by the Nasdaq and tech stocks, which took a beat, and you can see that it's gapped down on the open and then basically didn't look back all the way down. So you can see it was down 4.05% or something like that. So really, really harsh night for bulls, and it looks like it was a delayed reaction to what Powell was saying. Okay, Powell's talking up interest rate rises, having to be more aggressive if they need to be, and it looks like yesterday in the previous session, the market sort of took that in a grain of salt and kept going higher. Now, the problem is now that consumers are looking to wane. Now, you do not want those, especially in the US, which is a major support from the consumer. You do not want them to start standing aside, from shopping and things like that, and providing support to the underlying economy. Okay, especially with such high interest rates at the moment, high inflation levels at the moment. Okay, we need to, or they desperately need them to basically buy stuff. Okay, and and keep that economy ticking along. So we were talking about this yesterday. It's a bit of a way up between the economy, a strong economy, and high inflation levels. Now, if the economy can keep ticking along nicely, then they could potentially sustain higher inflation. But at the moment, and the Fed's going to raise rates anyway. But if they start failing, if the economy starts failing, the numbers come through a less, not as supportive, then those high inflation numbers are going to really start to bite on the underlying, the hip pocket basically. So there could be a lot more downside to come, and that's pretty much the thesis at the moment for me. Looking to attack those lows if we can't. I mean, we're not in oversold territory at all on the S&P, on the underlying index. We are on the futures markets, on the CFD pricing for the indices, but we're not on the, this is only a 30-minute chart. We're not on the underlying indexes. So if we just look at a daily chart quickly, and you see, look, the daily chart is getting to that overextended territory. But when things start to unwind and fear starts driving prices lower, forget about your momentum and all that sort of stuff. It's just basically go with the flow. Okay, so we'll just stick to the 30-minute charts for now. I would expect that to trade into those lows, to test into those lows tonight. It'd be interesting to see how that goes. Now the Dow, much the same. We were talking about this level yesterday. If it's going to react down off that level, or if it's going to keep grinding higher and that bounce, the markets are going through a bit of a bounce. Now they're not bouncing; they're basically heading south again. So it'd be interesting to see that. Like I said, that 30-minute chart is not extended, but the daily potentially is. But like I said, if things unwind, they just unwind. They don't care about your momentum, anything like that. Any indicators, they just will unwind. So that well entrenched on the downside. It's still heading south. There's no support in sight just yet. Potentially it's going to trade into those lows tonight, or test into the lows tonight. May just blow them apart. We may get a bounce tonight. Some early bargain hunting, but we'll see. The Nasdaq, much the same. So they're all they're all looking much the same. We're getting to that sort of extended level where we were before. So we're probably going to be testing the previous lows around that 11,680 zone. And momentum could easily take us a lot lower. It could just blast through that. So we'll have to wait and see what tonight brings us. Now the DAX, go over to Europe now. DAX was this level that we were talking about yesterday. It's coming into that zone yesterday where, the trend is still down. If it's going to hold that, it's going to hold that and just head south. Now we saw that little flush up, and that's just to trap some buyers into the market, turn around and squeeze them out. So it did that in the European session. So the trend down was underway in the European trade. You can see here it was just about 10 o'clock when we just started to trend down, and it got hit. So there might be more to come. It closed at 130, and the Dow was still heading lower from 130 onwards into the close. So I'd suspect there's more to come. We'll probably be trading into this zone at 13,850 tonight. Into the UK, now they come out high CPI numbers. So they come out in line. Problem is they're still very, very high. Okay, they're at 9% or so year on year for the UK. So that's not a good sign for rate rises and pressure from rate rises. And if the whole world starts to unwind a bit, expect that to continue lower. Now we're going to start to squeeze any of these longs that have been building up from this low around 71.59. I wouldn't be surprised if we have a bit of a flush high, but I think the market's going to gap down on the open. Gap down just to where is a bit uncertain. I would expect if we're going to gap down too close to 73.40, we're going to flush straight into 73.40, and it could be a bit of carnage on the open. And then I think you might find some bargain hunters to see what the US does when they start to open. Over to Asian markets now, XJO. Now this is roughly where I'd expect it to open, down 120, 130 points, and that's into this zone here around 70.58, 70.55. Now, if we can't hold up on the open, there's going to be carnage. Obviously, people are going to be, your retail are generally going to puke on the open, and then it's just whether or not there's going to be some insto buying coming through, or they're going to stand aside to this afternoon until that puking's been done. Because when you get such big moves like this, you're better off standing aside and just waiting to see what happens. Unless you want to sell, obviously, if you're hitting your stop losses, then on your risk levels, then you've got to sell. You've got to honor those risk levels. But if not, and you're looking to buy, just don't be a hero and don't try to buy on the open. Okay, just wait till the dust settles, because you don't know if it's going to settle here or we're going to head down to 69.70. I mean, who knows just yet? And that trend still remains intact on the downside. We've got leg down, correction up, leg down. Basically, we've had this correction up, so the correction up could be over today, and we're just looking for lower highs to sell into. Okay, and we are extending. It was a good little run up, extended on the upside. So, it's going to gap down in the open, and then we'll have to see what it goes to from there. The Hang Seng, it run up a bit like the DAX. We ran up into this level, found resistance at that level yesterday, had a bit of a flush lower, ran up into that level, and that was the first session was down, the second session was up, and it closed on its highs for the underlying next. Now the futures have been smashed, and we're going to open down 430 points thereabouts. It's whether we get gap down and gap and go. The index could just gap and go, where it's probably like this, more like this, gap, just keep going down, or that's enough of the retest of that zone, or we're going to start to drive back up again and hold a lower high. I'd have to wait and see how it opens. I'm not going to be biased anyway, because this market has been up for a couple of strong days. Good strong day here, another good strong session, held a higher low, good strong session up, held a higher low, strong session up. So it held into that level, and that's kind of still the longer term downtrend is intact. So it could be that this gap down is just going to cream people, okay, on the open, and like the SPY or the ASX, we're extended up on the upside. So going to be carnage on that open there. The Nikkei has not so much the same, but it has reacted down off some resistance zone around 27.047. That's going to gap down into this zone through here at around 26.289. So the index dropped about 630 points from where, so that's the futures market, or the CFD dropped 630 points from where the index opened. Closed. What am I talking about? So where they closed, so there's going to be carnage again on the open. It's going to be, sort of that. You're better off more standing aside, just in the open, just let to see where it settles. If you're in an intraday trade, you're going to be trading around a level, so you're going to have to deal with a gap. You don't know whether it's going to try to close that gap a bit, at least, or it's just going to extend on that gap. Okay, so you have to wait for sort of that first few minutes or first half an hour to play out. Over to the currencies, the dollar, as we mentioned, it was on these lows. If it finds a safe haven bid, if the indices roll over, it's going to find a safe haven bid, which it did. It's starting to rally, and I think what's going to happen, we're going to start to pressure back up to those highs, okay? Because, like I said, if the consumer is, in further releases and economic data and stuff like that, if they're going to show that the consumer is going to be weak, that's not what the economy in the US wants, okay? And that's going to be putting more pressure on the Fed to raise rates. Get it under, start to strangle it. Otherwise, it's going to really crimp on any spending. People are going to be hurt at the hip pocket. Okay, and if they're not spending now, they're not going to spend down the track unless the Fed can get it under control and really ease down into inflation. All right, so for now, that market's up, the US dollar's up. We've got this level to contend with at 104.77. What we could do is just have a bit of a pullback, retest into this zone around 103.76, and then run higher. At the moment, the pressure is up, and it's going to be a safe haven bid, and I wouldn't expect that to stop until we get a decent bounce into the US equity market and we start to see this unwind again. All right, over to the euro. Obviously, that ran down. You got a big flush up when the US dollar's down. US dollar's up. We get a big flush down. So that level held at around that 105.39, and it's all within that major daily support zone. Okay, you can see that I've got that coloured. Just weaken that. Actually, that's a lighter colour there. You can see that's that daily support zone through here. We had come into that support zone, consolidated, dropped again, dropped through the lower end of that range, straight back up again. And it's whether or not we're going to start, just head south, take out this low at 103.54, or whether we're going to start to consolidate around that daily zone. Okay, it's a big move. If you go back to the daily, let me just get on there. It could easily, with this flush down like it did previously. I just want to make that a bit longer. There you go. We flushed into this low, we bounced. We could just continue to extend down. Okay, it is extended. You can see it's well and truly extended, but it doesn't mean it can't keep going down. Or on a daily basis, momentum can run back up, ease back up. So you go from overbought, say that mid-range at zero line, and price can go sideways. If you see that, it's not going to be a good sign, because once momentum starts to swing down again, that market's just going to drop out of the drop through support levels. All right, we'll get on to pound. Go back to our 30-minute chart. Actually, the daily, you can see that daily's bouncing off that 122.45 area. Momentum's still down on the daily and the 30-minute chart, so the daily's still down. We had a bit of a bounce, bit of a corrective move back up, and now we're heading south again. It could find, it depends what the US dollar does to offset any buying into the pound. So the pound may find some buying, because if they'll be looking down the barrel at rate rises as well. Because of the CPI number come out stronger than expected, like I said, 9%, and that's all that was in line. Very high, very high. They're going to get that under control. So if they're willing to leave it, then I think if they're not willing to be aggressive towards rate rises, then that US pound will head down. Pound will just get sold, especially when the US dollar's heading higher, and it will just get smashed. Okay, but if they're starting to look down, rate rise a bit harder than what a lot expect, then that pound may find some buying to offset the US dollar buying, and may just sort of drift down into these support zones. We'll have to wait and see. Aussie, obviously an unwind. We come off that level we were speaking about yesterday. That was a key level. You can see that little flush. That flush was around just after the open. It's a little flush in the open. We started holding some lower highs, okay, just off that 70.35 zone through here. So trend is down. I'll be looking for those lower highs to continue and just see where it takes us to. We could be, whether or not we're going to hold up here. Just going to move that again. Whether or not we're going to sort of hold into this zone, I don't think there's a clear level. It's not, for me, it's not a major level. More like we could be heading down here in the longer term. Okay, we'll just take that off. We'll just have to wait and see. I mean, that's lower high at the moment. So if you're trading intraday, just remember we have a bit of a bounce now. Look for the lower highs to come into play. If they keep grinding higher, so be it. Okay, US yen. Now that obviously found some selling. You're going to find some safe haven yen. We were speaking about this. If the safe haven yen comes back in, safe haven yen buying, then that's going to roll over, because it's going to outweigh the US dollar buying, which it did. And you can see that by the market just extending lower. So to me, this could get a bit of a run on, and more from the US yen buying than US dollar buying. Okay, I mean, if US dollar starts to pause and they continue to sell buying into this yen, any shorts having to cover, then you're going to get a bit of a beat down, I would expect. So that's potentially a level there you're looking into, but I think just watching for lower highs. It's a bit extended. It may have a bit of a grind back up, and we may get some a bit of a grind back up into the yen, or so the pair, before we start to head south again and it really start to extend. Or we're just going to get something like this, extension down, another extension down straight into the support zone, or even flush the support zone. So just be wary of that today. It's worth watching. Gold, the fake inflation hedge. So more, that was choppy. You can see it's got a little bid. It's held just in through here, okay, at around 1807. Now that's a little minor retest fail, double bottom, which could help bring in some buyers, but it's getting offset with that US dollar buying. Okay, so it's still in terms, so the pair is a currency as well, and it's in terms of US dollar. So they're buying gold as a safe haven, and the US dollar is getting bought up, which is kind of offsetting each other to some extent. We'll just have to wait and see where that goes to. But if there's not a strong safe haven bid, if we sort of start to chop around below these lows at 1824, start to chop around, we sort of failed attempts to go higher, then expect that to go back straight back down to below 1808 and into 1785. If we can hold this level and start to hold a higher low here, and we start to work our way up to 1830, now 1830 confirms this as a major higher low. So we've got push up, pull back, another push up. So this could be what we're looking for. Okay, if we just clone that and we grab that and we extend it out, we could be looking up towards these highs, which would be quite handy if we can get back up here around 1857 or so. Okay, we'll just wait and see how that plays out. Oil had a bit of a fade last night. We'll talk about this if it starts to, we can't hold up in this level, which we didn't. We went straight through that, so there could be more to come. I think longer term, we've got this potential move down. You've got to move down to the support zone. If we can't hold up at any of these higher levels, you've got the level in here, which is around 102.77. We'll just take that out of the way. It's kind of nothing. Major high, so we've got this high up here. It failed to get there and it rolled over. Obviously, as the equity market unwound, you're getting pretty much, it could be a lot of things. It could be just that people don't think there's going to be demand for oil anymore and they're taking their money and running. The longs, at least, so there's longs built up through here, taking the money and running. Some margin issues where people are having to cut positions to, margin positions to ease off a margin. Whether into equities, if equities start to melt down, they're closing out there, they're probably getting caught with margin calls and things like that, which tends to have a bit of a flow-on effect across markets. We'll wait and see how that goes there, but I would expect that downtrend is going to continue. You're probably looking at there's little minor levels here, which I wouldn't be looking into. I'll be looking more into that 103.05 or 103 even. Okay, see if we can flush that level. If it continues to go down, then we're looking sort of into this 100 even. All right, copper. Copper obviously finding pressure from the US dollar rally and will continue to do so if that US dollar continues to rally. Now, it did spike into a level just in here. You can see this minor zone through here. Well, not so minor. It's actually traded around that area, which I expect it to could easily extend a bit lower. Okay, especially if the US dollar continues to rally, that could continue to spike down to new lows. Okay, momentum's down. Trend is down in the short term anyway, and it's all whether we're going to support zones, whether they're going to hold or not. Okay, but for now, the bigger play too. We should get a bigger play here. Show you bigger play is down. Okay, move down, consolidation, down, rebound, down. It keeps holding major lower highs. This move down. We got a lower high in here. We just broke that. It's whether or not we're going to hold and go back up, or this is just a retest fail, and we've got more of a a flush of that zone and continuation down. Okay, so just remembering that over the longer term, it's been up for quite a while. You've got this major trend that could unwind. You've got major double top here with a lower high. We could be easily looking to four even before we find some more support, or we could completely smash through that level. Okay, it is extended on the downside, which leads me to believe we're going to get some buyers starting to step in, maybe hold it. We might need a major move up. Sorry, a bit of a good bounce before we get this key lower high to work into. Okay, but for now, you've got those resistance zones, support zones to contend with. Now over to the cryptos. Cryptos didn't do too much overnight. You can see, to me, they're rolling over. Be very, very wary, because if this starts to unwind, and so what's happened, it got smashed through, Bitcoin smashed through 30,000. Okay, we can see that stops got unwound. It's come back and retested that zone. Okay, and it started to go back down again. Now, if equity markets continue to roll over, I think Bitcoin will start to play catch up. It didn't really react to the downside with equity markets overnight, but it could easily do that. And if we got and if margin has been unwound with this little push down, a lot of people have been flushed in the market. They're going to be very, very tentative to get back in, especially if you're looking down the barrel of this kind of price action for the 30-minute. And then, on the daily, we could easily look to get back down to test low 25.4, test these lows. No problem whatsoever. Okay, so just be very, very wary with the cryptos and Ethereum. Same sort of scenario. We're starting to roll over here. We're going to be testing back into this zone. I would expect back in 1800 or even lower. Now, that longer term, that's a lower high. That's lower high holding, which suggests you're going to test into the lows. Okay, so cryptos, they could be in for a bit of a beating. I don't want to talk that up too much, but be very, very wary. Trend is down. Trend is holding down. All right, we'll finish it up there. Got through it a bit quicker than usual. So, like I said, if you like what you hear, it'd be great if you can leave us a like on the on Trading View. Feel free to take a look around our YouTube channel under Trade the Structure, and take a look around the website, www.tradethestructure.com, and subscribe for free for more free material. All right, guys, thank you very much for joining me, and we'll speak to you again tomorrow. Good luck trading today. Bye.